Welcome to Revere Asset Management's Your Money with Danny Stewart
The market will always overshoot to the downside and to the upside.
and Don Vandenbord.
Because it's not how much you make in the markets, it's how much of that you can keep. The Lean and Mean Memorial Day edition. Dan's out, Ted's out. Today it's markets only, no mailbag, no economics, just pure technicals with Don, Connor, and Todd. The A team, and I pity the fool that doesn't think we're the A team. And with that, we're going to get right into the chart. So Friday morning, woke up, futures were about flat, no big deal, but that was before Trump started hitting Truth Social, first saying Apple was going to have a 25% tariff on any phone not made in the U.S. That dropped the futures by about 0.33%, and that was followed up by little progress with the EU. They continue to take advantage of us, which is the whole reason why they were formed. So if we don't start making progress, we're going to slap a 50% tariff on the EU by June 1st. And with that, the futures sold off down as much as 1.5%. But a funny thing happened on the way to the graveyard. Well, as of now, as of 11:38 Eastern time, three beautiful words, three beautiful letters that you want to see every day when you're seeing something gap down, and that is OEL, which stands for open equals low. That's exactly what we saw with a bunch of stocks and with the indexes. As of right now, bouncing right at the 200-day moving average for the S&P 500, as you can see on the chart here. Let's go to the 5-minute chart. You can see right there the low, 57.6741. That was the opening tick, and we've just slowly worked our way higher since then. Long way till the close, and this is the Memorial Day edition, 3-day weekend coming up, but below the low of the China trade reset. In fact, we're just right back up into the low that day. So after the China trade reset, 6 days up, this will be our 4th day of a pullback, finding support at the critical 200-day moving average. That's the black line. Right below there is the 21-day exponential moving average, which is what we use for our short-term indicator on our trend gauge. Those two levels key to hold, or you will be seeing us get more defensive at Revere Asset Management. Let's go to the Qs very quickly. You can see they are still a few percent above the 21-day moving average and the 200-day moving average. So leading from a relative strength standpoint, let me draw my beautiful line here. For the past 4 weeks, you can see the QQQs, relative strength line trending higher, meaning they are leaning the market. You're very well aware, as we constantly stress, how those are heavy weights in the S&P 500, the market cap weighted S&P 500. On the other hand, the equal weighted S&P 500, that's the RSP, is looking at its third close below the 200-day moving average with an undercut and reclaim right at the 21 as of right now. You can see while the S&P 500 had 6 days up, RSP only had 4 of those 6 days up and is now working on a 5th straight down day. It means that from a broad perspective, the average stock in the S&P 500 is not outperforming. You can see the relative weakness line that I just drew for the past 4 weeks. So they kind of normally work in an inverse fashion. When you've got the NASDAQ 100 outperforming, you're going to see the equal weighted S&P 500 underperforming. And that's exactly what you see. We discuss this every night on our videos. The most transparent advisor in the world. That's what we are here at Revere Asset Management. And as I say at the end, it's not how much you make in the market, it's how much you can keep. We protected our clients during this 20+% drawdown in the S&P 500. people that say that you can't time the market say it's because you have to be right twice. You have to be right on your exit and you have to be right on your entry. Well, we get it pretty darn close here at Revere, detailing our entries and exits on every portfolio change that we make, both to our flagship Growtection portfolio and to our new and more aggressive Turbotection portfolio. You can see the Dow Jones Industrial Average here below the 200-day moving average as well. And the laggard Russell 2000 has not even tested the 200-day moving average. As I mentioned in the video last night, Pie Chart Advisor saying you got to have some diversification into small caps because historically they outperform. Well, they haven't outperformed in a significant period of time. And as I always say, if you're diversifying into a downtrending asset class, it's like buying rotten vegetables at the grocery store to maintain a balanced diet. There's absolutely no reason for that. That's just one of the Don-isms that I pull out every now and then on the market. And pretty clear what's going on for right now. The keys to that we will be watching the rest of the day and into next week. Remember, market closed on Monday for Memorial Day. Is the 200-day moving average on the S&P and the 21-day moving average coming up beneath that. That's your technical picture. We've got two segments today. Connor is going to talk about nuclear stocks, and Todd is going to talk about some earnings gaps that we've recently seen. We're going to go to Connor first. He's got 7 names that are rocking today because Trump tweeted last night, or maybe it wasn't him. I think there was speculation that he was going to sign a executive order to hasten the pace of implementing nuclear technology across the U.S. as a way to it's clean energy. A lot of people are scared of nuclear, but these stocks are acting well. And Connor, take it away with our first name,
Yep.
NNE.
Yep. Yeah. Thanks, Todd. Yeah. Don pretty much covered the catalyst. That's why, it's a pretty quiet day in the broader market, down a little bit. Well, I shouldn't say quiet, but weak. But these stocks across the board are having big days today. And Don perfectly explained what the catalyst was. And, many of these stocks had big runs in 2024. And why they're getting bought up is just because the electricity demand in the US is rising for the first time in 2 decades. And this is all attributed to the growth in AI and data centers. And these are the pure players that benefit that. And so, summarize the catalyst: anticipated executive orders from the White House to boost nuclear. And then again, a lot of these energies needed for these data centers. So NNE, this is the first one. I would classify this one as a more speculative, smaller one. Not one of your liquid leaders, although it's trading huge volume today. But you can see really nice base, found support at the 200-day, and this is coming up the right side, super strong on huge volume. So all these are going on the watch list because there's a clear catalyst, there's huge volume, nice charts showing tremendous relative strength in the past week. And so as long as today's lows hold on NNE, this could flag out, set up a pullback entry. You can kind of treat these like earnings gaps, but really nice action from NNE. Next one, SMR. This one is another one that had an awesome move in 2024, and then was very linear, ran super hard, and then it's just been going sideways / in a downtrend for a couple months now. And now you can see this one is up really strongly today. It's trading 25 million shares, so huge volumes coming in. I always like saying this probably isn't your Aunt Sally buying these stocks today. This is big institutions buying, given how big the volume is. And yeah, it had that gap up the other day as well. And so this one, coming in some overhead on the left side. But again, if this one takes out all-time highs or 52-week highs, there is no overhead left. And like I mentioned, these stocks are running on a real catalyst and there's real application for the energy. Next one is GEV. We own this across Growtection and Turbotection portfolios. And this one is, up a little bit less. The ones that are up the biggest are more so the module reactors, I believe. But GEV's in the space as well. This one is just acting like a champ, really. Since it found support at the 200-day, it's just been riding. The 21 higher has never even tested it. So now it's breaking above those left side highs. So maybe it could use a consolidation a little bit, a handle maybe, but again, into all-time highs. These stocks can just float higher for longer than you think, as given there is no overhead resistance. And GEV was one that we participated in 2024. You can see unbelievable move. And this is another point I want to make is the story for this stock never changed. It just the price action did. And that's why you can't fall in love with something that's going down, because this went from 447 to into the 200s. So that's a huge pullback. But again, the story never changed once price started cooperating and, telling us that this wants to go higher. We knew the story, so we're engaged with this one. It's acting really well. Would actually welcome a pullback to add more onto this one. But currently, no complaints. It's acting really well. Next one is CEG. And this is another one in the group. This had a really nice multi-day consolidation after a big move up off the lows. And again, common characteristic with all these charts is they were great 2024 winners. After DeepSeek, they got hit and with the general market, but now they're all coming back to life quite nicely. And, now the story, a lot of people are believing the story once again. So this one's looking to break out through 300 out of this flag consolidation. Looks really good as well. Next one, VST. And this one's got a very similar chart as well. It's very similar to CEG's. Got this tight 5-6 day flag after a big move up off the lows. And these are just building nicely on the right sides of the chart. OKLO. This is another very volatile one. More of a higher beta momentum one, but this one's up huge on huge volume. You can see had that same pattern as CEG and VST. And then, Don, pull up an intraday chart too, just to show that these aren't giving anything back as well. When we talk about earnings gaps, if we're buying it, ideally, it never breaks low a day. And you can see right off the open on the gap, it never really violated low a day. And it's been trending up the whole day. Had that little consolidation flag pattern mid-morning, and now it's continuing higher. And you can treat these as kind of earnings gaps. It's not earnings, but there is a significant catalyst. And as long as the lows of today for all these stocks don't hold, they should continue higher. And then last one is CCJ. This is more so uranium, but again, fits the theme of the sector. This is breaking out of that flag kind of cup and handle base as well. So we'll see what it does when it starts to rally back up and some of that overhead resistance on the left side of the chart. But again, these stocks are huge focus. They're acting really well today. So only have GEV, but would look to, add another or two and then water the flowers and cut the weeds. But really, really hot day for the nuclear energy stocks today.
Yeah, great summary, Connor. I'm going to throw in a couple of ETFs for consideration too. NLR is the VanEck Uranium and Nuclear. All of these names that we mentioned are part of these ETFs. So you can see the big gap up there, heavy volume as well, still coming into the top of its base. And another one, URNM, Sprott Uranium Miners, lagging chart coming into the declining 200-day moving average. There's also a URA. We prefer URNM because URNM takes a position in the physical uranium as one of its holdings. URA does not. But a couple of ETFs to add to that list. So 10 7 stocks and 3 ETFs in the red hot nuclear sector / theme. Amazing numbers on the amount of power that is needed to support these data centers, and really the most effective way to do it is with nuclear power. Thanks, Connor. We're going to take it over to Todd right now, and he's going to talk about some recent earnings gaps.
Thank you, Don. I'm going to go over 5 or 6 earnings gap names, most from this week, some from the last week or two that we're focusing on. And let's get right into it with AS, Amer Sports. This is a company that makes several different high-end brands of ski, outdoor footwear, hiking wear, as well as baseball and softball equipment. This is a nice power earnings gap that occurred after a double bottom base breakout going into earnings. And on the earnings day, they beat earnings strongly and had a 19% gap up on 347% volume. What's particularly appealing about this and why I wanted to talk about it today is it had a nice shakeout where this morning it opened below the high volume close earnings gap day and was quickly bought right up. So you get a nice down open like this, you see a nice gap and shakeout below those lows and a quick recovery. That's exactly what you want to see. So that's the first one that we're focusing on and keeping a close eye on. The next one is NRG, which is also in the energy power generation space. Normally, we probably wouldn't be too interested in a power generation utility name like this. But this was a huge monster earnings gap because it was above a 20% gap. This was a 26% gap. They absolutely crushed earnings. They reported $2.62 looking for $1.49. But one of the big announcements in this quarter was a $12 billion acquisition of LS Power Generation. And LS is a huge power generator of natural gas electricity, okay? And this is going to double NRG's generation capacity. So this is why you're seeing a relatively boring utility-like stock have such a huge gap. And their main focus is really in producing power for Texas and the Northeast for the generation of power needs for data centers. So this has got the buzzword of the data center flair into it. It's got a huge gap up, and all it's done since is just hold the high volume close of the gap up day, and it's been holding its 8-day moving average. And incidentally, we want to see these names just surf the 8-day exponential moving average, and this is so far acting very well. Next play on earnings is Snowflake. Snowflake was just a plain earnings gap up. It wasn't a power earnings gap. They didn't beat earnings by enough, but it was a solid quarter across the board. And what's notable about this is going back to going back to November, this was a name we were all in on this gap that just turned into a big cut base, and it never followed through, and the market got sloppy, and it reset the base into this latest cup. But what's nice about this particular play is it was able to gap above all those highs from the previous 2 cup bases, and it had a nice run going into earnings, and you can see on the weekly here that it is trading into the highest territory since that previous high in 2024. So Again, strong beat across all of its businesses, a 36% increase in their backlog, and holding very well on today's open. So this is another name we're watching. And down to the final two, TOST, TOST. Again, reported a few weeks ago. Power earnings gap of 10% on at least 200% increase in volume, and beat by more than 20%. So this is a play that's pulled back some, had a nice run initially, has pulled back to the top of its earnings gap day. We discussed this one as well as a nice stochastic setup yesterday where it pulled back into the high of that gap and set up into a nice 60-minute stochastic cross. So this is one of Don's setups that he talks about. So you've got this 60-minute stochastic cross occurring here. So again, we're going to want to see this hold in this area and make some progress, but so far it's staying very close to its 8 EMA and holding its earnings gap day very nicely. And finally, Urban Outfitters. We're definitely seeing a couple names in the retail space showing some powerful action. Urban is a stock that's had several gaps on earnings, but just was never able to go anywhere. And had a decent quarter here. This particular one is a monster earnings gap because it was over 20% on big volume, and it's holding nicely so far. Strong results from all their businesses, but in particular Anthropology. So this company has continued to produce excellent results in all their businesses. Again, the market probably held it back in this last base. However, this is a nice breakout that we'll be watching, and it qualifies as a monster earnings gap. So those are just some of the recent names here within the last week to 2 weeks that we're watching. That's all I have.
Great stuff, Todd. We've mentioned several times what happens with these big earnings gaps, and years back, Reg FD, full disclosure, basically it's legislation that was passed that prohibits insiders at companies from leaking specific news items related to the performance of the company to just a few analysts. If they have something material to say, it has to be through a press release available to the public at the same time. And as a result, what happens is Wall Street is offsides. There, you can't have the CFO calling up a guy at Wall Street saying, yeah, we're going to crush the next earnings. And then they write a story about, yeah, this company's going to crush the next earnings. No, they got to keep it quiet. And then what you find is Wall Street gets surprised by the earnings reaction. Demand far exceeds supply, and that pushes the stock up. And what you're seeing is hedge funds, pension funds, mutual funds clamoring to get in on stocks that are outperforming, because if you're in something that's not outperforming, you're going to be underperforming. And that's how portfolio managers get punted from their jobs. Plain and simple, that's the explanation of why you see so many earnings gaps that you didn't see decades ago. And we're going to pretty much wrap this up. Let's go back to the S&P 500. Basically, where we were, it's where it was when we started the show, holding the 200-day moving average, the 21-day moving average. And this is the part of the show where I would throw it back to Dan for a closure, but instead I'll do my best Dan impression, which I'm sure is going to impress the masses. All right, if you like what you heard, tell your friends, tell your family. Go to revereasset.com. Happy Memorial Day, and we'll see you next week on Your Money. Not their money, your money. It's not how much you make in the market, it's about how much you can keep.